Hi, this is James Shrug with Westpac London's end of day report for Thursday, July the 4th. Well, of course, it was US holiday today, so markets there were closed, but European markets certainly had put on a stellar performance today, with the London market at the close up 3.1%, the French market up almost 3%, the Germans up more than 2%, and it's gains of more than 3% in Spain and Italy. Very solid gains there, and largely related to the European Central Bank and also the Bank of England policy decisions. They both left rates on hold, but the Bank of England indicated that it would probably be adopting forward guidance at the August meeting. They also said in a statement, and in fact issuing a statement in itself, when there's no shift in policy, no change in rates or no change to the asset purchase program. That was unusual under the old regime, so we got a statement today, and one of the quote that really got markets excited was that the incoming data had been consistent with the May inflation report's outlook for growth and inflation, but movements in market rates higher had not. That is, had not been consistent with the outlook, and that would actually, in fact, weigh on the outlook. So what the committee was saying was that markets had been pricing in too much hawkishness, despite the fact that there has been a run of better data on the UK of late. And for the European Central Bank, the President Draghi, he provided forward guidance for the first time, revealing that the Council had effectively a downward bias or an easing bias, and that they expected key rates to remain at present or lower levels for an extended period of time. Now, it wouldn't be drawn on what an extended period of time means, but that's the first time that the ECB hasn't been reluctant to pre-commit, if you like. That's the term they often use. So that saw markets really pick up sharply. Now, there was very little indication that they were any further down the track in terms of balance sheet expansion or another LTRO or negative interest rates on deposits. But as I mentioned, with the sort of gains that came through today, markets clearly liked the idea that interest rates could fall further in Europe, and that even if they didn't, they'd be staying low for a long time. We also had some UK house price figures. They accelerated to their highest since 2010 on the Halifax measure. In Portugal, the two parties that are making up the coalition government there are kind of talking again. It seems that they want to avoid a collapse of the government, which would bring on an early election. And as we saw in Greece and France and Italy in the last year or so, elections tend to bring in anti-austerity governments, which well, in Portugal's case, they've put in a lot of hard work in terms of making their economy more competitive, in terms of getting their budget deficit down. They were on track to re-access financial markets and exit the bailout for June next year, but that's all been thrown into uncertainty following the resignation initially of the finance minister and then the foreign secretary, the foreign minister. Now, the two parties are talking in the hope that they'll be able to reach some sort of compromise. That seems to have calmed markets down somewhat as well, but in Greece there's ongoing concern about whether or not Greece will get the latest bailout tranche. Germany is insisting that Greece needs to meet its budget deficit reduction target and asset sales targets, but there is mounting talk that there might have to be another write-down of Greek debt. Certainly our view is after German elections in September. That's a realistic prospect. Okay, in terms of commodity markets today, many of them were shut, but the ones that we're interested in are open. That's oil down 0.1% at $101.12 a barrel, gold down 0.2%, $1,249 an ounce, and copper down 0.8%. And the Aussie dollar, it's been rising today. It's at 91.6 US cents. That's up about a cent from when I spoke yesterday. We've got the US jobs figures, the official data coming up Friday, and I'll be back to report on those same time tomorrow.